The views expressed in this podcast are not to be taken as either trading nor financial advice. Neither the announcer nor the Sirius Report make any claims to be certified financial advisors, and all reporting is dedicated solely towards being both informative and educational. Good afternoon, everyone. Welcome to the Sirius Report Market Wrap-Up for Friday, September 20th, 2024. Now, the interesting thing, of course, is this was a huge week when it comes to the Fed. We saw the markets respond on Wednesday afternoon and yesterday, but today, Friday, was a rather quiet market experience. So with that being said, we're going to go over how the markets fared, a couple of stories in regards to this, and of course, our primary topic, gold reaching a new all-time high. So with this being said, let's go ahead and jump in and see how the markets fared. Well, the Dow was up and down for most of the day, but not too much. It was in a range of 41,900 to a high of 42,100. So about 200-point range, closing out the entire trading day and the week at up 38 points to 42,063. Meanwhile, both the S&P 500 and the NASDAQ were in the red. S&P was down 11 to 5702, and the NASDAQ lost the 18,000 handle, down 65.5 points to 17,948. In the bond markets, well, yields no longer going up on the back end of the curve, and it was pretty much a sell-off through most of the bond market yield curve. The 2-year and 10-year is still, 150 basis points difference, 3.741 for the 10-year and 3.597 for the 2-year. Meanwhile, the dollar closed out the week below the 101 handle, but it was up 12 cents today to 100.74 on the DXY against a basket of, currencies such as the pound, the yen, the Swiss franc, and the euro. Meanwhile, yen plunges after UATA sees little urgency to hike rates as upside risks to inflation are easing. So they hiked once and all inflation was taken care of. No, it really is not that accurate. The upside risk to prices, according to UATA, does appear to be easing given the recent yen strength. Well, the yen strength is because the dollar is weakening. It has nothing to do with the rates that are going on in Japanese government bonds, and instead are worried about the dollar, which de-dollarization continues to go into high gear. And of course, Fed coming out and pretty much saying that they're going to cut rates probably one more time before the end of the year and definitely into next year. Well, as we said, the gold markets, gold was up $36.30, closing almost to its intraday all-time new high. The gold did close at a new high of $26.22, up $36.30, but the intraday high was $26.26, just $4 off. And silver was up 39 cents to $31.24, relatively close to its high of the day at $31.50. Well, John Paulson is back. Now, if you don't remember who John Paulson is, John Paulson was one of the original guys. He wasn't mentioned in The Big Short, but he was one of the original people who bet against the housing market in 2006, 2007, 2008, and made billions of dollars doing it. So now, he said that if the Democrats win the election, he's going to pull all of his money out of the stock market into cash and gold. Now, the reason I say this is not to make it a political thing, not at all. But the point is that if you're waiting until economic or fiscal policies from the government to decide then to buy gold, you really don't understand what gold is in the first place. Gold is money. It's not an investment. And it's something to hold your value of your wealth, and of course to be able to keep it, because it does not have counterparty risk, not like the dollar, not like treasuries, not like the Japanese yen, not like anything. Even Bitcoin has counterparty risk now that the Wall Street has been able to get in and do derivatives off of it. Gold, paper gold itself does have counterparty risk, but physical gold does not. So anyway, you have to wonder about these billionaires and these great investors. They really do not understand money. They understand credit. In the crypto markets, well, it was a relatively flat day for Bitcoin for the last 24 hours of trading. Meanwhile, Ethereum was up again over 3%. Bitcoin was up 0.45% to close out the last 24 hours of trading at 63,236. At one point, getting over the 64,000 handle, and Ethereum was up 3.49% to 2551, pretty close to its daily end of day high. In the oil markets, talk about a flat day. WTI crude was down 3 cents to 71.92, and Brent crude was down just 17 cents to 74.71. Now, here's one of the biggest misnomers that's going on across the internet, across alt media, across fintech, the like. There's this Western belief that China is, their economy is slowing down, they're deep in recession, and there's nothing that can be done about it. That is far from the truth. The reality is that Chinese commerce, trade, and transactions are less and less and less being recorded by SWIFT. So the West doesn't get in their head that they're trading bilaterally outside of SWIFT with countries that are willing to take the yuan and they're willing to take the other countries' sovereign currencies. That does not get recorded, and it's not mentioned inside of Western analytical financial reports. So with that being said, we know that China, because of the tariffs and the sanctions, are creating their own chips, they're creating their own technology, they're creating their own manufacturing, and their population is buying it more than they're buying Apple, more than they're buying Teslas, more than they're buying all types of American products. Well, Germany has suddenly come under that, and they're using the China slowdown as an excuse for the fact that fewer and fewer of their cars are being sold. Mercedes-Benz shares in Germany tumbled on Friday after the luxury car maker slashed its full year profit outlook. The company warned that further deterioration of the macroeconomic environment, especially in China, was the primary reason vehicle demand softened. And for those who have gone out and seen the new EV cars that are being made in China that are beyond anything that Germany, the US, GM, Ford, Tesla are making, they're buying their own products. And they've been forced into this because the West has decided to play economic warfare against them. And they just said, you know what, we're just going to take our ball off the field. We're going to do it ourselves, and we're not going to buy your products anymore. And that's going to cause major schisms for corporations that have been relying upon Chinese consumers to save them as Europe and the United States retailers and consumers go into their own recession. Finally, we're going to take a look as we head, what's today? We've got 1 month and about a little more than 2 weeks until the presidential election. And the important thing is what do the people think about the economy in the necessary swing states? One of the most poignant economic mottos, slogans used was when James Carville, back in the day of the Bill Clinton, George W. Herbert Walker Bush election, was "It's the economy, stupid." This was after Bush had a 93% popularity rating after the Desert Shield, Desert Storm, the first Iraq War, but the economy then went into recession. It went in hard, and Bill Clinton was able to win with about 44% of the popular vote. Why? Because it's always about the economy, and that's what this election is about as well. Swing state renters earn 17% less than what is needed to afford a typical apartment. Housing CPI, which is lagged by as much as 18 months, is suddenly catching up today, with real rents will be rising by double digit thanks to the Fed's rate cut. And this is going to be one of the problems with the housing market, is by cutting the rates, you're going to lower the mortgage, but you're going to then devalue the dollar. Your purchasing power is worse. Housing prices are going to go up and rents are going to go up. So the question then is, since this is a lagging indicator, is it going to be, how quickly are these rents going to go up heading into November, the first week of November, and the elections? That's an important thing, especially in the swing states. And we'll find out come probably election night if we don't get any data before then. Anyway, I want to thank everybody as always for being a part of this discussion here at the Sirius Report, today's market wrap-up for Friday, September 20th, 2024. Thank you for being a part of this community, and don't forget to subscribe, like, share, comment. If you like this, go ahead and spread it out to other people. And until the next time we get together, have a great weekend.